Hi everyone, David Berson, Chief U.S. Economist at Cumberland Advisors, talking with Kathleen Stephansen here at Camp Kotok. Kathleen is the Chief Economist for Haver Analytics. So Kathleen, let's talk about the international economy. We know the U.S. economy, despite all forecasts, continues to grow. What's happening with the world economy? We might separate Europe and Asia.
Yeah, I would like to separate the two because what's interesting is that Europe, we all thought that certainly the Eurozone would be in recession now, but the latest numbers seem to indicate that, there's a little bit of a recovery, a little bit of a momentum, which is very good. A, because it gives a little bit more leeway for the ECB to tighten if they choose to do so, because their fight against inflation is still ongoing. So, from that standpoint, I think that one can be somewhat relieved, if you will, that the economy is not yet in recession. Asia is a little bit different. Asia, you have Japan, which of course is showing signs of growth, which is really very encouraging. And we've seen the Bank of Japan changing slightly its monetary policy in order to adjust the yield curve, allowing the 10-year note to move up in terms of yield to closer to 1%. Now that's, I think, a big step. It doesn't seem that way, but it's a big step because it does mean that they will allow sometime in the future some tightening of credit conditions. So that's one thing. And then the big elephant in the room, if I may say so, is China. And China is a big question mark. We're seeing a slowdown, anticipating further stimulus probably from the government and the central bank. The question is when, what? And that has, of course, major repercussions to the rest of the global economy.
Sure. Now, in the U.S., we just had Fitch downgrade U.S. Treasury debt, and we've seen some impact on the long end of the Treasury curve. Do you think that will have any impact on foreign investment into U.S. Treasuries?
It's a good question. I don't think that it will make a huge difference. We've seen some market reaction for sure, but my sense is that it's a one-shot deal, if I may say so. I don't think that the other credit agency will necessarily follow. So we need to see some rebalancing, maybe some repricing in some of the securities. But beyond that, I think that the biggest issue is really how will the market price the cycle and the economy, which has surprise on the upside in Q1, in Q2, and the question is, are we going to see a major slowdown or not? I think that is more important at the moment than really what Fitch has done.
Last question. What's the biggest risk that you see on the horizon?
The biggest risk, as far as I'm concerned, is that central banks tighten too much. Because what we don't really understand, I think, is how these economies are reacting to the increase in policy rates to date. Are the leads and lags different than what they've been due to the shocks, external shocks? Or is it just, the fact that, we might be off by a few quarters? We don't know that. And if central banks continue to tighten based on current statistics, we might tip the economy over, or economies over, more quickly.
In an unnecessary fashion.
Right.
Okay. Kathleen, thank you so much.
Thank you.
Thank you all very much.